Hello, everyone, and a warm welcome to today's cryptocurrencies update for Wednesday, December 7, 2022. I would like to cover the big picture for this update and start with Cardano. Cardano is, in my humble opinion, still in this C wave lower to about 10 cents, plus or minus a few cents. So into this support zone here between 5 cents and 15 cents. We're not there yet, but it will start to look great once we get there. Avalanche would look better with a 3, 4, and 5 setup down to about $9 to $8. That is strong support. We lose that support, then it is quickly down to $5 to $2. This remains my big picture. Once this wave 5 in red of black wave 5 of A completes, we'll see a massive bounce back to ideally the $60 to $100 before we get our final C wave lower into those single digit numbers. From there, we can then expect cycle 3 to target new all-time highs well into the 400-500s. So it's coming. So we're now looking already at a, I would say, almost a 100% rally soon, and then a drop, and from that drop we could see a, let's say, about 1000% rally. So I think there is tremendous opportunity in the future. We're just not there yet, but it's coming. We're just not there yet. So stay tuned. Binance coin would look better with a last C wave lower, maybe to as low as $25 for a larger fourth wave. Alternatively, we break above 460, then this wave 5 is confirmed. But the FTX Alameda debacle really kind of put a nail in the coffin for this more immediate wave 5 higher. So I prefer the ABC up and now a last C wave lower. And again, this C wave can kind of slowly taper off, just like we're seeing here for Avalanche, and just like we're seeing here, especially for Cardano. The A wave tends to be often the initiation wave, fast and furious. It really initiates the downtrend, and then the C wave kind of trickles lower, long and slow, a death by 1,000 cuts. Bitcoin, bigger picture, I'm still looking for a last fifth wave lower, 3, 4, 5, ideally to around 10,500, plus or minus 1,000. From there, we should then see a rally, ideally back to about 40,000, plus or minus 10,000. So remember, that's a 400% bagger, plus or minus 100%. So there's tremendous opportunity coming. That is nothing to sniff at. And from there, we should ideally see one last leg lower from 40,000 down to about 7 to 5,000. And then we should rally to the 150,000, potentially 1.5 million. So from there, there is already 20,000, 2,000 to about 20,000% upside. So again, I think in the near future, there's tremendous potential to the cryptos. Just don't discount them yet. But one has more downside risk eventually, but it's still a wonderful trade. The other one is a fantastic longer term trade. So shorter term, this is the preferred wave count for the 1-2-1-2 setup, 3-4, and it looks like wave 4 may have already completed as what I would call a flat correction. Wave A, wave B, wave C. This could have been a running flat. There are enough scribbles in place to suggest this C of 4 has completed right in the ideal target zone on November 30th. I said we should look for 17,285 to 18,105, and then on November 5th we topped at 17,405, somewhere around there, right in this ideal target zone, and have since been declining, and now we're back below this green target zone. So far so good. We go below the November lows, then I'm going to look for, I would say, about 12,000 plus or minus 1,000. We rally pretty much back to where we are now, and then the last final drop for this wave A. This is my primary expectation. All right, so in Elliott Wave, one has a primary expectation and an alternative expectation. This is not to say that I am therefore always right, because if one of the two doesn't work, the other one will work, and thus I'm always right. No, my primary expectation is for this green 3, green 4, green 5. If it doesn't pan out that way, which is on a break above 18,185, that has been on the charts like forever, since pretty much mid-November, then my primary expectation was wrong. That's really all there is to it. Then the alternative becomes, of course, the primary, but the primary expectation was wrong. This is no different than actual trading. When you place a trade, your primary expectation is that it will be a winning trade. Otherwise, there is no reason to place a trade. Of course, you will have a stop loss in place. Fools and amateurs don't have stop losses in place, but a stop loss means you were wrong. The trade is not going according to plan. It will not be profitable. Same here. All right, the primary expectation is for this pattern, but if we break below or above a certain other price level, that pattern is incorrect. So it's the same exactly as trading. That's why Elliott Wave is really nice for trading. You have clean, clear price levels to watch that you can use for stop losses or buying opportunities on breakouts. For example, if we break above 18,185, I'm going to look for 21,475, as long as, of course, the previous lows hold. Very simple. So again, Elliott Wave has nothing to do with I am right regardless. My ego has nothing to do with these analyses. I am just trying to analyze the markets according to the set patterns that Mr. Ralph Elliott determined over 100 years ago. That's all we're doing. We're trying to interpret those price actions as good as we can, which is not easy because we're in a probabilistic environment. Second, this has nothing to do with, oh, all you're saying is the market can go up or down. Yes, it can, but I'm not saying it. If I would say that, it would be useless to have any forecast, because that's all we're going to say. It's go up and down. See? No. What we're saying is that the primary expectation is for this, in this case, down, up, down sequence. That's the primary expectation. If that gets invalidated, then we know it's not going to happen. That's all there is to it. That's the primary expectation. So the primary expectation is first up, then down, up again, then down. It's not, oh, it can go up or down. That's not what we're saying at all. So fools, amateurs, and other idiots really think that's what we're saying with Elliott Wave. Not at all. We have a set path, a primary expectation. When proven wrong, the alternative expectation is in place. We already knew things would go up, and now we expect it to go down. Below the November lows, this wave 5 here in green is underway, of red 3, red 4, red 5 still to come. Ethereum. Ethereum should follow the same path. I would like to see a nice full 1, 2, 3, 4, 5 underway, okay, with a low somewhere around 700s, and then a B and a C wave. That would be really ideal. Okay, again, we have very large rallies pending. If we get that low, then a larger drop for a wave C, and then another final cycle 5 wave. And we know from previous price action over the last several years that fifth waves to the upside are often quite extended. So we can easily go to 15, 16,000 on Ethereum. Shorter term, we've reached the ideal wave 4 target zone. And this does look like a 3 up here for A, an ABC lower, and then potentially 5 up or an ABC higher for a complex wave 4. And now in wave 5, if we drop below, I would say 12,020, which we're got to already today at 1217, then we should be looking for this potential wave 5. So this path is a little bit different than what we're seeing here, but it would even on this map fill in quite nicely, and then we should see our rally. So Ethereum still has one more bullish potential left, and that is that we will get a very deep wave 2/B that does not go below the June lows. Alternatively, we are going below the June lows. We will then go into the 600s before we see the next big bounce. Both paths for now point lower, because this fifth wave points lower, or the orange fifth wave here points lower, and of course this black fifth wave points lower. So keep that in mind. Linked, Looks good for a 1, a 2, a 3, a 4, and now in this wave 5 with potentials already completed. I have no signs of a reversal yet, which is pretty much on a break back above $10 on a monthly closing basis. Matic/Polygon would look better with a last C wave lower to about 30 cents and then wave 5. Above $1.30, I would say, and then wave 5 is pretty much better confirmed. And we will then see, I think, the $9 to $10 level. For now, we'll have to wait and see. Again, below the August low, which is red wave B at about 70 cents, then I'm going to look here for 30 cents based on simple symmetry. Then all we got since the May low here was an ABC for a bounce, and then we should be in this, as I said before, slow, lower bleeding C wave of blue 4, and after 4 comes 5, easy peasy, that we know. Lastly, Solana. Solana is still underway, in my humble opinion, to about the single digits, $2 to $5 for this wave C of cycle 2. And then we have a nice support level here before cycle 3 can start, which could easily bring this one to close to $1,000. But I don't want to make you drool yet over those numbers. We haven't even bottomed yet, so we're still miles away from it. So please keep that in mind. For now, this also points lower. So that is all I have for today. The bigger pictures, they need to be reviewed. Are things still on track? Yes, they are still on track. They 9 out of 10 times look for lower prices, even if it is a C wave or a fifth wave, lower prices. But some of them have not been confirmed yet, like, for example, here, Matic, not yet confirmed for Ethereum, but it starts to look better that way. Similarly for Bitcoin, etc. So once we get the 4, the 5, the 4, the 5 sequence completed, I think it is really time to start looking for a triple-digit rally and not the pathetic low volume rallies we have seen all year so far. All right, the tune of the cryptos will change. We're not there yet. First, I am looking for most of these for a triple-digit rally, followed by another nasty bear market, which will probably be fast and furious, a C wave, as we can see here for Bitcoin. And from there, we could see one of a rally that has not seen before in percentage and price and in speed. That's all I have for today. Thank you so much for listening. Take care, trade safe, and I'll see you all on Friday. Bye.